Morning, guys. John here, Mr. Forex Fire. It's 10 to 8 in the morning. Now we are setting up ready for the morning session, which will kick off at 8:30. I just thought I'd come on because I owe an apology to a good trading buddy of mine, Mr. Ross Bodman. Butters, as we know him in our Discord community. He's kindly been in chat with me over the 5-minute scalping stuff that we've done. And if you haven't seen that, you can see that further down on my YouTube sort of wall. I called him Tom yesterday on my live session. So I do apologize, Ross. A bit of a brain fart that morning. As you can imagine, I speak to a lot of people, and yeah, the name Tom just come out. But Tom suits you, mate. Tom suits you. But all joking aside, Ross, I hope you're enjoying the channel, as is everybody else. We're going to be heading onto the charts at around about 8:30, setting our goalposts for the 2-hour sessions for this morning, which is, as always, let's just take a look just while we're on here. So that was the USD JPY from yesterday. We want to go on the Euro USD, so we'll just change that to the London Euro USD. And we can see here, I mean, this is just generally from out of our session. There's a harmonic pattern there. It's beautifully played into that area there, you know, the middle part. But all things aside, that's something that's played there. We're still on this heavy downtrend, But look at this, yesterday's video, I marked out this orange area for an area where we would possibly head down to. Again, we've got an even heavier area, which is down to here. We've actually respected this line quite a bit yesterday. So the bias from yesterday was pretty spot on, to be fair. Again, we're on the 5-minute there. But if I just knock on the 15, because we go to the 15 as well. And again, you can see on there the harmonic pattern that's within there. Again, high, low. I haven't got that spot on, but there's your harmonic there. So yeah, going on what I'm seeing at the moment there before we get involved with anything. I mean, obviously, body, just a body without the wicks. We've got a supply area there. We've got certainly a demand area down to here, a field of play. So again, either way, we're looking for a breakout of either one of these. I mean, those are the 15 minutes. We'll go down to 1 minute. Just take a look. And again, as you divulge deeper, there's your harmonic again, you know. And just simple little things like this sort of comes together for you when you start pattern trading and things. There's some great books out there for pattern trades and things like that. But we've got our 15-minute supplies. Okay, you can drill these down and nest them in, as we do on some of the videos that we've done in the modules. Again, from there, let's make this one orange. I'll drill this out. That could be an area that we're heading for. Let's get this moved out. See where we are. So I've got that there. So what are those two areas, to be fair? From there, you've got that there. So even on that, you've got that nesting inside of that. So when you get these nesting areas, they do add a lot of confluence, and there we are. We're right on there. So there's the areas we're concentrating on at the minute between them two. That's a field of play. Again, down to 1 minute. We'll set our goalposts. There's 8:30 a.m. Start. To the 10:30 a.m. finish. And that's what's set up for today, guys. We'll see where we're heading towards, but we've got our supply and demand areas on the top, supply demand area on the bottom with a nested area. So at the moment, what we're seeing this at the moment with regards to a channel. I mean, if you wanted to, you could sort of bring it into there, to be fair, but I'm more inclined to have it there, to be honest. As we've got the swing, okay, we're starting the median line, it's come down to respect. We might start getting the push up into the higher areas, to be fair, but that's something else we'll look at the moment. I'm going to pause the video and we'll be back at 7:30 for the start. Okay, guys, see you in a bit. Hi guys, it is now, excuse me, 25 past 8, so we're not quite ready to get into our session. However, again, just want to show you a little bit of the fire magic and things like that. So let's take a look. So we've got our goalpost set. Okay, we've got the nesting supply areas, got a couple of demand areas. See which one it plays off first. However, just want to take your attention into here. I did a video in our Discord a while ago with seeing a higher time frame within a lower time frame, and what I mean by that is I showed you a method, a technique on how you could sort of apply a higher time frame layered on the lower time frame on your candle structure with regards to drawing out these high to lows swing points. Okay, and I've drawn these out, and then what happens is in between here you've got what we call intermediary price. All right, now if you watch, if we just look at this, and if we go, and as we scale up into each area before the half-past time comes, that's 1 minute. There's your 5 minutes, and each time I scale up, you'll see this will sort of, let's take a look. We'll start from the 1 minute again. Okay, let's just get a better understanding. Okay, let's get an eclipse, and we'll work it from the swing points. Now watch, this is intermediary price. This is the 1 minute chart, swing high to swing low. And as we go up on these minutes, you'll see this time will start to tighten up into the 15 minutes. Again, the swing points are not changing. They're just fractally, they're getting smaller. See, we're going into smaller candles. And then once we get into the 1 hour, if you see that, look at that, can't make it up. And let's see what happens once we go to the 4 hour. It sort of disappears into the 4 hour. So when I've drawn that on the swing points, the 1 minute, it's more or less coming into possibly be a 2 hour time frame for the candle on the swing points. And why do I do this? Simply because, let's just take a look, click on auto. It's simply because when price is moving back down into, get the magic wand, the fire wand, as price is moving up and down, okay, these swing points, these will hold significance. So even though I've drawn these swing points here, what you've got is this structure here is on a higher time frame, holds a significance, okay? Again, if we go back up to that 1 hour, let's go down to half hour. See that the half hour there, that's one candle, okay? So what you have, and again, I don't make this stuff up, guys, that there, when I went the high and the low of that swing point from the 1 minute, okay, what you're seeing is structure of that swing point, and you've got intermediary price. Now, normally within that structure, you would normally get a 50%. Take a look. You would normally get a 50% retracement back into the area before you could normally get a bounce off, if that makes sense. A reaction, because it's a zoned range. It's a pullback, okay? A pullback as such. So what's happening is, as price is coming up, you've got price come back down, okay? So, I mean, obviously it's consolidated here. Might be a bit of a bad option to show you, but let's just say we'll go to somewhere else. We're hitting under the half-past. So we need to look for a trade in a minute. I'll look at the floor. Right, so let's take a look. So this one here, for example, you've got that, and you have the low, okay? Okay, and then from there, guys, let's just do the range. Didn't quite come into touch of 50%, but you can see as a range, the pullback, that there. Let's see just what happens to this when we go up to that half hour. There you have it there, you see. You've got that range there within that one candle. You see, so on the 1 minute, what I'm getting at, on the 1 minute, you can draw these swing points like that, the high to the low, and you can see that's what that is, intermediary price between the swing points, if that makes sense, to the half. From the 1 minute, it'll generally be the half hour to the 1 hour is a constriction timeline, if that makes sense. I hope you followed along with that. That's a little bit of secret sauce with that. Again, from there, I would possibly say, right, for now, let's just have that as an area of interest. Okay, we'll see what will come down. If we do get here a break, we may get a break of structure off that. Come down, break, bang, bang, and then it might head up into this area of our higher supply areas, if that makes sense. Again, we're not getting into a trade just as such as yet. We're just getting a general feel of where price can head, where price is heading to, and what we're looking at. Again, if it was to head up onto here, there's 50% there, you see, on that high. So this has actually come in to mitigate on there. But again, what you can do is draw a line, and then you can 50% it again, okay, to refine your area. Just get rid of that. That could be an area of importance at the moment. 50% of 50%. You're just creating what you would call like a quarter line. So this could bounce between a breakout, Bosch, and then come down. Get this right. And sort of bounce off this, come down, hit off this area, and then go to the demand areas before then possibly shooting off back off, because eventually this is this has been in quite a strong downturn for some time now. So we're just letting this play out at the moment. I'm just gonna scroll back. It's just a general bias of stuff that I'm looking at the moment, guys. Again, there's nothing there at the moment other than I've got the trend here. I'm waiting for a break. What we'll do is we'll come back in the next however long. We'll wait for the break on one of these, and then we'll make a decision on which way a price is going. So I hope that 5 minutes of showing you how to use the path, because that's what that is. That's this. You're on the brush. You go to path, and you can draw out these swing points. Just go high, low. Try if it's consolidated. Obviously, it's like a double top on this instance. You've got a lower, a higher low, higher high, higher low, and this is a continuation up on this way at the moment. Again, drawing these out and then implemented by going up a couple of time frames and see how your draw ups react to what you've done within this. Because again, after all, guys, when prices is driving down, there will be some form of respect within the range of each of these pullbacks. And again, at the moment, just to go on it, this here, it's a consolidated range. So you've had a drive and what you call an accumulation, and then you've had a drive. We might come back down to sort of mitigate certain areas of a pullback. So my guess is we may have a drive down into this area, simply because this here at the moment as a swing point is a protected low. That's a protected low. So this here is what I'm getting at. You have got that there. This at the moment is the active sort of maneuver on price action. This is where we are as price. So we might come down anticipating a break of this. If we do get a break of this, get a retest, and then we come into play to sort of start working within the range on this, okay? And then we'll need to see what sort of price action is wanting to do, whether it's going to respect something within this area, possibly. Let's have a look. Possibly you've got a candle within this range. Again, let's make that purple. Possibly that last down before the up on that range of swing. You see that? On that range of swing. We may see that drive down into there before we get the push. That all depends again on how this here, let's go back on the brush, how this is respected. Will it break the range of this pullback? Again, we haven't broken that, so we've got a range on the low side, a range on the high side, so that's your high low. We're within that range at the moment. And at this time we are coming down, so it looks like we'll come to attack this area, and if we do, we might get that push down, retest, and then down into this area here, this zone. So we'll wait and see what happens. I'm going to pause the video. I hope that's starting to make a little bit of sense. If it's not, watch these videos back, because I work heavily on supplying demand areas, zones, patterns. I don't try to rely on sort of indicators or things to tell me where and when to get in and out of things. So I'm going to let this play out, see where we are in the next 5-10 minutes. Hopefully we'll come out of this range and it'll start working towards the next range. When it does that, we have the breakout. Then we look at areas of where we can get into from an order block format. Okay, guys. So again, I hope you're having fun. I hope you had a great week so far. don't forget, drop your comments, engage, let me know what you're thinking of the stuff that I'm putting out there. Is there something that you need a little bit more help with? Just let me know. Again, hit the subscribe and the notification bell on the YouTube channel. And if you want to go that one step further and help me even more by getting set up as a member, whether it's a Spark or a Fire member, click on the join that you're seeing in the description below and support the channel that way as well, guys. Okay, because I love doing this content and I couldn't do it without having the audience that I have, but more so the stuff and the support that I get towards doing this stuff, it helps me build even bigger stuff outside of YouTube, which is this sort of stuff here, the Discord, and the guys that support me in there is absolutely fantastic. So I'm going to pause the video and we'll be back in a moment. Hi guys, and we're back. Let's just maximize that. Get that big Geordie head of mine. The big Geordie head. So as you can see, we're coming down. Look at that, beautifully. Can't make this stuff up, guys. We've got our reaction off that 50%. Now we've got the range. Let's just get rid of some of the bits of noise. Get rid of the fire wand. So we've had a break. Okay, so again, you've got a high. Just move my phone out of the way there. You've got a high. You've got low. And again, it's good to write these things out. Lower high. Structure wise, this does help you structure wise. You've got a lower low. Come to here. We are now anticipating price. Just ignore these bits here, okay? We are now anticipating a move back up into this range, if that makes sense, because we've had a break of structure. And I just want to get used, guys, get used to drawing these things out, okay? This is your range. This is just going to help you. That's your range you're working within now. We are expecting a pullback to a certain extent on price would normally come in. Let's have a look. So that's the range there, okay? Generally, 50, you could normally go to, let's say, a 50%. Again, let's just try something on this. There's your 50% mark, okay? Let's just drill that down even more. And as you can see, 50% of 50%, it's bringing it into conjunction of the last up before the down, okay? And so I'll be looking for a price action just before the 50 odds here, just above that, and to come down into that swing there. There's a 1 to 4.23. I hope you're seeing the value in this. Again, I'm looking for that push up into here from this lower low. Again, we might get a continuation down. The continuation down is occurring. This is the nested area. Again, the nested area, or we're going to get a pullback from the 50% of the nest of the order block. Looks like we're going to. There we are. Bang on the money. See, we'll get that drive back up. The pips from the swing point down to where we are currently, there's around about 13 pips of maneuver there. That's a 1 to 4.23. If I did that to there to 1 to 2.36, I'll keep it there for now. So what I'll do, guys, I'm just going to let this play out. I hope you're seeing some bits of power in this today and what we're doing. I know the chart looks a little bit messy, but again, I am drawing these out before they happen. They are respecting these areas. Like I said, I don't make this stuff up. Comes with practice and over time, your confidence. That's what this is about, getting your confidence there, okay? Getting your confidence and then your consistency, and then we can work on the profitability from that standpoint. The profitability will come once you've got the confidence and the consistency of understanding the structure points like this and being able to implement your areas of importance and key areas, okay? So I'm going to pause the video. Hopefully we're going to get a reaction up into the area of the 50% of this. Again, the 50% is that line there. It might be a case of this actually, where this actually just bounces from there, but we'll see what happens. However, again, we've got a structure point here. So that's a 2, 4, 5. Go back to 4, 2, 3. That's where you could close. And I go heavily on things like move and stop losses to break evens. I think if we get the structure come up into here and enter, okay, we'll make this a break even trade. We'll see what happens. Again, if this was to push out of here, and then come into retest of that, I may be looking to move the trade selection down to the next swing point, which would be possibly that sort of area. Okay, but it all depends on what happens on price here. We'll see if we'll get the price come up. We'll see if we'll get the price come up to touch in, to come back down. Okay, so I do hope you're enjoying this session. I love doing these, delving deeper into live price action and things like that. We do have that. I did see, I think, about 13 pip maneuver. We'll see. We'll come back into play again. When you watch these videos, I've got them on playlist as well on my YouTube channel. The 1 minute scalp, they're very good to watch through and take notes upon as well, because I'll go into little bits of nuances and sort of tips and tricks that I use with regards to, certainly for today, we're using this path line from the swing points, but then it's highlighting the actual live intermediary price within the timeline. So the timeline on the path that you're putting out is going to give you a higher time frame structure, but that's an overlay, and underneath that, within that, is your live intermediary price, if that makes sense. So again, this here should be holding structure, okay? Should be holding structure. If it breaks structure on this side, then we'll be bringing this structure down into play on the next part. So we're going to pause the video and we'll be back in a second. Hi guys, let's just have a quick look at where we are. Get this a little bit bigger. So we are on the Euro USD 1 minute scalp session, London session. We spoke a little bit about the path, okay, the path tool, and then being able to make lower, higher time frame entries, which is higher time frame structure by doing the highs, the lows, and things like that, and then still implementing that as an overlay on top of the intermediary price of the 1 minute, okay. From there, we spoke about the zones or the range. So as you get a pullback, you've got a range, okay. And I'm just going to get rid of some of the noise on here, and we're just going to reanalyze a few things. Again, we are consolidating in the nested area, which was to be expected. Something I'm possibly looking at the moment, because we implement a bit of smart money into our trading with regards to this, because it sort of intermingles together pretty well, to be fair. So if I was to go from the high, the lower high structure on here to the breakout down to here, okay, and just go into my settings and go into the template and just pick the banker stuff on here, you can see from here, this is a money zone area, okay, the 7.1 to 7.86. Yesterday, I explained what these different areas are on pullbacks and how it gives you, as it moves deeper back into the fib zones, how it gives you a more discounted price rather than the premium area. if I'm to get rid of that bit there, okay, just to get rid of some of the noise, if we do get the push back up, you see they say the 50%, this line here was the 50% of that range, okay? Now this lies heavily within the money zone of that range, okay? So if we were to mark this out as an area of a possibility of importance where we may get price drive back into that zone there, the range, okay, maybe do our entry, refine our entry to here, make it slightly bigger, and then do it to the range, to the bottom of this range here, where it's on a protected low at the moment. Again, we haven't really had structure break out of this protected low at the moment. So as it lies, what we're looking at is now a drive up. It's just starting to peek its nose out there now. Drive up into this on the money zone, and this resides within 50% of the range of this, okay? And I dare say we may even push. Oh, we got another zone. Let's take a look. 50%, that is around about that anyway. Yeah, so that's a heavily consolidated zone. Do we have anything engulfing wise with a candle? Keep it at that for now. I'll protect it over there. Again, we'll see if we'll get the pullback. We may not, and we may. We'll see what happens. We'll just see what happens structure wise. To 1 to 2.49, and again, guys, I'm only risking 1%. I know yesterday I risked 2%. I'm going to keep this on the 1 minute scalps, even though I'm on 23% for the month. I just want to keep this at a 1% risk. Okay, we're now starting to get the push back up. It is on the protected low. Again, it is on that area of importance where it was yesterday. If it does drive past this completely, we will be heading towards the nested order block. So we've got the 15-minute on the green, and then we've got the 1 minute on the 5 minute on the green, I think it is, and the 1 minute on the yellow. So again, if we do get that push out, we could be anticipating a break of this vital area and then down into the lower side. And even more, we've got an even lower area further down as well, guys. Okay, so we'll see what happens structure wise. Again, if we don't get into the trade, we don't get into the trade. We've just went into some tips and tricks and some more analysis based upon movement of price and price structure today. And I do hope you are taking notes and you're taking some, maybe some little bits of tips out of what we do these sessions. So I'm just going to pause the video and we will be back in a moment. And as expected, we've got some sort of consolidation at the moment, guys. Again, we don't worry, we don't sort of rush into a trade. We stick with the bias, we stick with our analysis. Again, we're coming down, lower lows. I mean, this will be the lower low now because there's nothing really sort of coming to fruition with regards to the higher high sort of thing. So you've got this here. Let's have a look. I suppose that there, from an aspect of a pullback, obviously that is a bit of a pullback. So this here would be the lower high at the moment. Other than that, we are hitting a bit of a consolidated zone. We've got a nice big engulfing candle out of this area, breaking structure of these parts at the moment. So it could be a case of we're going to head down into 50% of this area and make a push up towards the higher side. Again, I'm gonna wait and see if it shows its hand to see if this then pushes above this area here. Okay, but at the moment, as we've pulled down, we started to get the pullback from this entity here, and we have got liquidity residing here. It's took that liquidity out. The next liquidity side is around about this area up here, but we'll see what happens with the pullback. Hopefully we'll get the push up into this area for that money zone, which was the 50% of that price range. Again, I'm not going to rush into a trade. I'm not just going to put a trade on there for the sake of it. We've got to let price do what it wants to do. And once again, we do have around about 15 pips of price action on that in itself. However, from that to there, there's only 6 pips on there. So it looks as if we're going to constrict into a bit of a consolidated zone. But I'm not worrying too much. We've got some good analysis on here. We've got our bias so far. Taking a step back, looking at what we set the bias with this morning, it's all been hitting spot on. We've got our 50% areas. We come down to respect these areas. Again, if we break out, we will be looking for a continuation to the nesting area, but we just need to wait and let price do what it wants to do. There's one thing you've got to learn in trading, and that's to sit on your hands, even on the 1 minute chart. Even on the 1 minute chart. Yes, you can, when you look at a price, okay, I'll stop the share a minute. I'll talk about this as well. Okay, and we'll just get my lovely big head there. So basically, one thing I've learned, the biggest thing I've learned in trading, okay, price. Let's talk about price. Price is price. And you possibly hear me talk about this before. It doesn't matter whether you're on the 1, the 5, the 15, the half hour, the 1 hour, the 4 hour, the daily, the weekly, the monthly, the yearly. Price is price. Price is the same wherever you look at it on the chart. Okay, it's just fractal in nature and when it comes down. Now, when you're scalping, people think it's fast and it's furious. It is and it isn't. Okay, now I'm going to give you the reason why it can be. Okay, because when you think of scalping, you're in, you're out, in, out, in, out, in, out, and it's like that all the time. You want to be in and then you want to be out. Grab your pips, fast and furious like that. From a price aspect, okay, it isn't, because price is price, and it'll be where it wants to be on every time frame's the same. It's just you've got a fractal nature range. Again, I go on to what I've done there this morning with the path. Okay, with the path we did swing high, swing lows within the 1 minute, these big swings, and then it showcased within those swings the intermediary price action, which was the 1 minute. Now, we went up a couple of time frames, and as you've seen with the intermediary price within that swing impulse, every time we went up a time frame, that swing impulse constricted, got tighter until eventually you were into one candle. Okay, so you just got to keep the mindset of, yes, scalping can be, it's very emotional, first of all, but without having the structured approach like what I'm showing you on these videos, set your goalposts, okay? Have your range, okay? Wait for the range to break. Then check an order block, okay? Use a 50% of the order block. The swing points, again, on the swing points, when you get the breakout of the swing point in the range, look for an area of importance within the 50% of that, whether it's an order block, just an imbalance area and things like that. You do not need to go and chase price. For a long time, I've seen people that have been scalping, and I've known people that have lost a lot of money with scalping because they chase an entry, they chase price, they might not have the correct setup, so they move a stop loss, they may trade without a stop loss. So again, they are in front of the computer and they think because they're in front of the computer, they're looking at price as it is and thinking it'll turn, it's got to go back, it's got to go back. They're just some of the not do's within scalping. Okay, you need to treat this as if you are doing a long term. You have your set entry, you have your set stop loss, you have your target area. Between your entry and your target area, obviously you're looking to the left, you're looking at structure points on your swing previous. Set that within that range of the entry to TP and have a cutoff point where you say, right, that's my entry, it's come down, it's hit my structure point to the left. I'm going to take a partial. I'm going to move my stop loss to just above break even. So you're happy with taking half of your trade out, but at the same time, you're comfortable and in the knowledge of knowing that if that reverses and hits that break even point plus a few pips, not only have you been profitable, but you've took an extra few pips from out of the market. And that's the sort of mentality we need to get across to everybody that watches us. So a little digressed from the chart there for a second. I'm just going to share the screen, see where we are, because it's not always about trading's not always about chasing the money or you've got to have the conditions have got to be correct, and you've also got to have the right parameters in place. Now this will always stay on here. Now for me personally, again, I go about the way I trade. Once I get to 10:30, okay, if this has not ended, I would cancel the pending trade out. I will cancel the pending trade out because my time is what it's set on here. Nothing more, nothing less. And what I want to do going into further videos, is I've been asked a lot about pending orders. What are they? What are they about? And how do they work? So I will be doing more videos into the weekend. Very busy schedule. I will be doing more videos going into the weekend based upon pending orders. What are they? Obviously setting them. What do they contain? What are they about? How do they work? And how will they sort of go against you or stop you out? And how are they beneficial? Okay, so I've got a few more videos to do, and those videos will be getting put into the Discord as well for some extra sort of content for the guys in there. So if you're not part of the stuff that we have in there, you really need to hit the join on the description below. Again, I'm not going to go chasing after price. I am waiting for this it's holding structure within. Okay, we've got the swing point. We've had our initial impulse. We're now getting the move back in. This area here, just to talk about it again, that there is a 50%. Okay, we will possibly be expecting at some stage a price to bounce off this and then probably break out of here. But we want a discount price. We don't want the premium price. This is the premium price area. The discount price is this area here, the money zone. Okay, but we've gone a few pips just below that. So as the price moves from here, there's this impulse, the initial impulse, we get the pullback in. We just hit a consolidated area. Hopefully we'll get the push up into the area, and it'll not be the premium pair that we're looking at. We're looking at the discounted price. Okay, so again, we don't chase the money, we don't chase the entry, we don't chase the price. And the way I'm trying to get this across to you is I'm trying to debunk a myth that the 1 minute charts are too fast. They're not. When you set your stall out, your strategy, your method, and your approach to trading, you can tame the beast of what people think is the 1 minute. Okay, so I hope today's message is getting across to you a bit. Let's see what happens from now until, what time is it? From now until 12:30. We've got 45 minutes. We'll see if we get an entry on here. I'm going to go and make myself my halftime cup of tea. I've got my setup there ready. I'm not looking at anything else of interest at all at the moment. And we'll see if we get this entry for today. And again, guys, let's just take a look. Let's just take a look. We'll go on to the launch pad. We'll get this to open up. So we've got the 1 minute scalper. That's the 5 minutes. So at the moment, we're sitting on 23.84% still. It's a 1.7 gain per day. We've been doing this for 3 weeks. Again, this here, fantastic, fantastic. And again, we're taming the beast. We are keeping it under control. We're keeping it caged, and we're working the 1 minute to our advantage. Okay, I hope that's coming across. And then later on this afternoon, I'll be going more into this. We are doing a similar sort of approach to this, but I'm giving you a more structured sort of play-by-play on the 5 minute scalp. Again, I'm going to do that between 1 and 3. It's going to be the USD JPY, one of my old pairs that I used to trade and that I loved. But we're going to be risking 2% per trade on these. Okay, so keep an eye out for that video a little bit later on tonight, sort of thing. So we are on consolidation at the moment. From there, we'll just let this play out. I'm going to go and make myself my halftime cup of tea and a chocolate biscuit. Okay, so I hope you're getting some value from today's video. I will see you in a bit. Handsome face a little bit bigger so I can just talk about got myself my trusty cup of tea, Forex fire mug. Lovely mug, it's big, just like me. Big cup of tea. Can't go wrong with that. So what we have, guys, again, look at this. We've got liquidity. We have liquidity residing here, and then obviously liquidity there. So we're stuck within a range of a range. So as we delve deeper, as we like to do towards the end of the session, okay, you can see in here, this is the pullback from the initial drive down, okay, and from what it's done is it's created a range within that pullback, within the impulse to the pullback, I should say. So we haven't made actually lower high there, okay. We haven't made a lower low as such. In fact, I could say that's the lower high there, in fairness, simply because, whoops, simply because this here, when we've got the lower low, which is that point there, you've had the pullback up to here. But because the pullback has not superseded the area previous, which is on the upper side, we continue with the trend. This hasn't superseded that. So your lower high, in essence, is that area there. So when we sort of pull out, you'll see you got from here, I do apologize. As we go out, we've got a high, a lower low, lower high, lower low. Because nothing has structurally broke that or broke this, that there is your lower high at this stage because it's broke that structure there, if that makes sense. So in layman's terms, what we are doing, we are building a bigger sort of scope and a bird's eye picture view of higher time frame layered on top of the lower time frame. And again, we still anticipate the breaker structure of this area, simply because even though this has come down, it's not broke that structure to create that lower low. This might be a case of it's only pulling into this range and then it might take off to there. So therefore, that lower high there then becomes there, and these just become part, these would just become part of the intermediary price floor, if that makes sense. Okay, so at the moment that is the lower high. This is irrelevant, this leg is just doing what this is at the moment. It's within the price range, it's moving down, it's moving up, it's moving down, it's moving up, and we need it to break this structure here to then produce that lower high, because this will this would always be the lower high, simply because we've not sort of broke that structure there. If it was to break that structure and it goes up here, this then will become a higher high, if that makes sense. So at the moment we wait, we anticipate, we tame the beast, and we wait for the price to move out of structure points. And again, if we go up into further views, go up into the half hour, you can see just exactly what I mean. From there, the lower low to the lower high. Okay, there's your price range within the 1 minute. We're stuck right in the middle of this stuff here. So again, I don't make this stuff up. Comes with years of practice, years of drawing, and the more you draw, the more you get sick of drawing, the better you're going to get. You're going to be able to identify stuff like this in structure, and then you're going to be able to understand structure. And it just comes with practice, to be fair. So I'm going to pause the video, got myself a nice chalky biscuit, and I'm going to have part of my cup of tea, and we'll come back. We are heading into the last 20 minutes. Again, it's not always about getting a trade. Doing these videos and we get a trade, it's nice. We build upon the 23% growth. And in fairness, there's a reason why I have that 23% growth. It's because I'm not rushing into a trade. I'm looking at structure. I'm building the structure. I'm identifying structure. I will get in the trade when it's correct for me to do so. Okay, so we're going to pause the video. We'll come back, see where structure took us. We'll have an end of session conclusion. Okay, guys, so I'll speak to you in a bit. Hi guys, let's talk a little bit more about obviously price action, patterns and things like that. Excuse me, just a cup of tea. Choke on the cup of tea there. So let's have a look at this. So what you see is we've got our path we set this morning. Okay, we have been anticipating price maybe coming down to the nested area, but again, this would then break the structure of this heavily anticipated area, which I went in on yesterday's session. Again, it was a good prediction. The bias was correct. It come down and it's sort of, it respected that area quite a bit, to be fair. Nice head and shoulder pattern there before the bounce out. Again, just to digress a little bit, just to show you some other bits and pieces how that can be done. Let's have a look. You've got down, up, down, up, down, up, down. So if we get this under here, this under here, this under here. Okay, so what you, I mean, this is just something totally different. You've got your head up to the shoulder. Okay, now if I put this to here, normally we get a breakout. This normally happens on a lot of patterns, to be fair. That could be a target area. I don't know where that is at the moment or where it moves to. Look at that, guys. Again, can it make it up? Bang. See what I mean? This here, this pattern in that style, head and shoulders. Okay, head and shoulders, breakouts, and how pattern and structure within pattern can hold precedence to a TP area. And it doesn't just happen on head and shoulders. I used to trade a lot with head and shoulders, ascending triangles, descending triangles, and things like when you get your triangles like this. The growth there depending on the breakout of whichever on the point of the triangle, will determine the structure point to a TP on the high side or the low side, depending on the breakout. And again, that there is just the length of the tip of the head to the neck of the shoulder. We had a breakout. Okay, you get a breakout. Generally, when you get the breakout that come into retest, which it has done here, you would then target that area up on the high side, and then what would happen is your stop loss is generally the shoulder from the previous swing, if that makes sense. So again, just to digress from what we have been looking at, scroll that back. I'm pretty chuffed with. I mean, that there, I've never traded head and shoulders for a while. That maneuver there in itself, guys, that would have been worth around about what, 14 pips or so, based upon a structure of head and shoulders within the 1 minute. Again, where we are at the moment, we are still within the range of the lower high, lower. This is the lower high. The lower high now has beautifully, and again, I don't make this up, has beautifully tipped into the 50%. Now I'm going to show you something else as well. Based upon a bullish bat harmonic, you can see this here. As we come down, there's a harmonic there. It's coming in beautifully 50%, okay, of that harmonic pattern. It's bounced off there, which is what I was expecting. I do want this to go deeper into the area for the discounted price to get our entry for, to be able to get it at 2.49. Again, if we get a push out of this, we might get a retest, hit the money zone, and then we might get that drive down into back down into the C area or the D area of here, to be fair. Okay, so I'm going to let this play. We do have around about 8 minutes left. Again, it's been interesting. I've enjoyed the session. Again, it's not always about taking a trade. It's about me getting the point across on structure, how structure is formed, how we respect structure. And again, guys, I'm doing this. I've got to stress this. I'm doing this on the 1 minute. We are not racing to get an entry. We are not using a silly software. We are not using a silly tool to tell us, oh, this is red, or this is green, or this is up, or this is down. Get in on the trade now. It's all, but that's all basically, it's all bullshit. That this is structure. This is price. This is the respecting of points of interest. Okay, again, can't make this stuff up. We went in earlier how these 50% of structure would be respected. It done it in front of your eyes. I drew this out over an hour or so ago. It's come back. It's respected that area. I did not need an indicator, a software, a tool to tell me that, look at this, look at this, look at this. It's going to move. It's going to move. You don't need them. You don't need them. Just if you are using them, just stop. Keep plugging into what we're doing on here. Again, we might get that drive up to get into the price, excuse me, on that money zone. I hope you are all having fun and enjoying the content I'm putting out there. Again, getting yourself to this level and this ability, it's all about drawing on the charts. It's all about watching what happens on your draw-ups, going back and back testing, making mistakes, do it on demo. Just keep practice. And over time, your brain gets attuned to seeing these patterns, these structures, and everything else on the charts. Okay, guys? So again, I'm going to stop the video. We'll come back in the next 5 minutes, and then we'll close everything out, and we'll have a chat on how today has gone, what we think. And again, I'm going to be doing the session later on this afternoon, and that'll be uploaded later on as well, guys. Okay, on the New York session. So there'll be some really good stuff coming on that as well. So stop the share, and we will be back in a moment. Right, it's the end of this session, guys. However, let's take a riggy diggy. Oh, what you could have won. Right, so at the moment, we are officially at the end of play. Again, typical. It looks as if we're going to head up into the area to pull back into this to give us the move. Again, stick with a plan, stick with a structure. Trading's done for today. We've had a good time. We've had some layups. We've structurally shown you a little bit more on how to tame the beast on the 1 minute chart. It's not about risking trades in the 1 minute. You never worry about trading the 1 minute. Price is price overall is the overall conclusion. Again, I'm not looking to enter this trade, even though I'm ending the session at 10:30. It's looking good to enter. I am not going to trade it. I will only trade upon my 8:30 and 10:30 time frame. Okay. However, we'll keep these pictures on here. We'll see what happens with regards to the price action. We'll see if it entered and goes down into where we expect. But overall conclusion for today, just stop the video. Or stop the share, I should say. Let's take a look. Just make my head a little bit bigger. So I hope you have enjoyed today's session. I mean, I get so much out of doing these because for me personally, as I draw these things up, it's sharpening my brain up as well. Because one, I'm having to do this in front of you live. It's still live because I'm recording it. I can't edit it at any time. So if I do make any sort of follow-ups with how I talk and things like that, you're going to see it on the video, to be fair. So yeah, I enjoy doing this content simply because I know there's people out there that's going to get so much out of it. And I know that because I get messages every day about it. But it also helps me to keep me focused, to keep my brain sharpened, and it helps me identify and structure and things like that as well. So it's me helping you for you to be helping me. So I get so much out of it. So hopefully today's video with the structure and the overlaying of the structure points, the highs, the low lows, the high lows, the low lows, and all that sort of bump, having that structured out, but saying the intermediary price, you can sort of plan and see we've got supply and demand areas within those structure points, the swing points. If those swing points hold structure, okay, then you know at some stage, especially on the 1 minute intermediary, you've got your supply and demand within there. So you can find little bits of trades and things like that in that. Once your trade breaks out of the structure, okay, your swing point becomes different, and then the field of play becomes different as well. So overall, 23.84, I think it is, percent for the last 3.5 weeks. That there is fantastic. Again, this is the real deal. I've been doing this in front of your face now for those 3.5 weeks. There's a lot of things out there that are wanting you to use tools and softwares and pay for them and things like that. Been there, done it, and you really only need to surround yourself with other like-minded people like myself and others that are inside of this community, where you're going to help each other sort of see structure. And after all, that's all Forex is. It's structure and price action. It's that's all it is. You don't need any of this other rubbish to be fair. Again, my name's been John Docherty. I genuinely do like to see anybody that engages on the stuff that I've got. Let me know what is your struggle at the moment. If there's something I can do with regards to a video upon that topic, I'll certainly put it in my schedule and my plan, and I'll do my best to do a video for it. Okay. And if I know anything about it, I certainly will do. If I don't know anything about it, I'll go out and I'll learn about it, and then I will do a video on it, because that's just the way I am. I'm honest, I'm genuine, I hold a lot of value and integrity in what I do. And even if one person can take something out of today's video, that little something, then it's a job well done for me. Again, if you are seeing things in these videos, please let me know. Let me know in the comments below. Let me know if these are genuinely helping you. If they are, I continue to do them. If they are helping you understand stuff to a great value, you can always come and support me that little bit more by clicking or hitting the join button that's on the header underneath this video that says join and become a Spark or a Fire member, okay? Because if I get that support built up so much, I've got so much more planned going into 2022. And yeah, it's going to be a fun time. For now, this is me signing off. I'm going to have a couple of hours rest, and then I'm jumping on to this afternoon session with the USD JPY, and that will also be uploaded into the playlist of the 5-minute scalper structure. Okay, so thank you very much, guys. We'll see you later on the next one. Have a fantastic weekend, guys.